Well, people, there's a lot of red on the screen. Is Elon Musk going to save Christmas? Is he Santa Claus? Is he going to start off this Santa Claus rally? I tell you what, the big sell-off today was led by none other than mega cap stocks. Tesla was down 8.88%. Coca had her day in the sunlight. Now, the selling came at around 5:30 a.m., an hour before market opening, and what sparked it was these macro data reports, right? So GDP came in at 3.2, consensus was 2.9. So what do you know? Like, this is typically good news, but apparently good news is bad news for the markets. We do have some major reports coming out tomorrow morning too as well, an hour before the market opens. Personal income, personal spending, durable goods. Okay, these are marked and highlighted as in red because they are considered major reports, and these are considered two-star reports there too as well. So what do I mean by Elon Musk? Will he save Christmas? Well, after hours, right after this big 8.8% sell-off, getting deeper throughout the day, it didn't close at the lows, but Elon went on a Twitter space and he mentioned that he doesn't plan on selling any more stock for the next 18 to 24 months. Definitely not in 2023 under any circumstances is what I picked up from that. And we saw this big old spike in the price of Tesla in the after-hours session. Look, I don't know if that's just going to be hopium. I'm not going to get all too excited about it, but it could potentially spark some short coverings and some potential momentum buyers going into tomorrow. So we'll see if Santa does come in the form of Elon Musk. Now, if you are looking at this, I was keen in on the 120 level throughout the day, and I was also looking at some other key levels, mainly 129. I think yesterday was the big one, and then we cut through that like butter. I started building into a long position within Tesla throughout this range, right? Actually, it was a little bit lower. It was around the 129 range. Boom, right around within this range right here, and I did manage to capture a little bit here on that sell off there. So I'm long Tesla. I've gotten out. The majority of my long positions were out, and then I started getting back scaling into a Tesla position. I'll go more into detail of how I positioned and how I got out of the SPY and when I got out of the SPY momentarily. If we take a look at the 11 sectors, they were all deep in the red. And you can see technology, consumer discretionary led the way to the downside, both down 2.5%. Down 300 points on the Dow Jones, so this one fared pretty well. Same with the broad market too, but it was just clearly the NASDAQ composite, even the NASDAQ 100 that were the big laggards on the day. Now, if we take a look at this book map, this is a heat map, right? This is showing where orders lie throughout the day. This is what we showed yesterday, and we keyed off some key levels here above us, and we talked about these ones below us, and 38.50. Well, look where we closed today. We closed at 38.48 on ES, slightly above that, so we closed right there on that specific marker. We got under it, and then we started bouncing throughout the day. We did get and hold below that daily VWAP, and then you could see more towards down here at around 37.85 we started capturing a little bit of a, could be a short covering, could be, you know, capitulation that we saw, and then now we're starting to see a move higher. These are the levels that I want to pay attention to tomorrow. 3775 on the downside, and then we have 3875 to the upside, and then I'm going to be keying in on that 3900 there too, as well, as we had a lot of volume previously traded there. Now, the Santa Claus rally. Will Elon bring it back? This is where it gets a little crazy. I haven't actually discussed this. I'm going to discuss it now, but I want to call out something that's very similar to this year versus just last year. And I'm going to show you a recording of my analysis during that time. So as you can see right here is December of 2021. And what you'd see is December started off down. We had a little bit of bounce up, and then we saw this 3-day just big hit to the downside to around the middle of where this channel's at, and it formed a hammer candle, and then we started to go on a monster rip before starting off the new year. So this was the Santa Claus rally right here, and what I found similar today was we saw, you know, this very sharp sell-off today, a lot of volatility. And what's crazy here is, look at where it tagged. It tagged that lower weekly expected move. So when I play the clip, you'll hear me say that, hey, if it comes and touches the lower weekly expected move, that might create some sort of an opportunity to see a potential rip. Next week is pricing in this move right here. Okay, we're looking at the SPY. The SPY can come back down to right in this zone, 452 to 450. So if we get some crazy spike to the downside, that actually might be a good opportunity to obviously, one, close in on some short positions, start to cover, and or buy long. right? And this actually coincides with this previous area of resistance. Resistance can become support. I don't know. So to me, as the market's pricing in more volatility, what does this say? Hey, if we get a big scare Monday or Tuesday, that could be a potential market bottom, and we might get that rally. Now, we might not have the same outcome, but I did find it interesting that we came down to around the middle of the channel. Around the middle of the channel, we created a hammer candle. We created a hammer candle. We tagged the lower weekly expected move. We tagged the lower weekly expected move here too. And it'd be just an interesting thing to see, you know, this big scary move right here. And then all of a sudden, potentially we get some sort of a rally. I've been waiting for some more buy side. Now we have earnings seasons around the corner, and that could potentially, if earnings are bad, go into an earnings recession, right? We see another leg potentially down in the markets. But I have been, you know, I'm interested in trading from the long perspective here eventually. And it could take some time. It could take into 2023, but you know, that's where most money is made, is when you can buy and you can actually hold on to positions a little bit longer. If we take a look at the 15-minute time frame, RSI got burnt to a crisp today. You can see we gapped down. This is where, so yesterday we talked about the possibility for this to be a bull flag, and boom, to the upside. And we talked about different levels as far as holding for stop losses here. Well, my stop loss was right here by the 5-day moving average, and then right under the low of the day. And I got out right at the very beginning of the day. I got stopped out, boom, right out of the gates. And then I kind of just sat around, waited, and then I built into a small Tesla position. Now, Tesla's more volatility. So when I say I build into a Tesla position, you got to understand my thought process here. My thought process is I'm going to build into a 3% position long. Typically, I do 6%, and I scaled into the position, you know, right at around this 129 for 1%. I did it around, I think it was right here, and then right here, and I was considering adding more at around 120. So I'm now, because of after hours, I'm slightly up on the position. Woohoo, but we'll see here if Tesla eventually gets some sort of a bounce, which would be nice. If we take a look at the Qs broke the lower weekly expected move, and we close right back up at the weekly expected move, seeing this little V bottom bounce. You know, it's likely that we, you know, play in the happy zone just right here, doodle around this lower weekly expected move. We'll see here, though, if Tesla, that after hours news, you know, creates any sort of spark where we get some more push to the upside. But that was just some insane selling. Definitely was not expected to see that type of move, but you got to understand we were just trading slightly above a massively declining 5-day moving average. So the trend continued down. Same with the SPY, right? We were above it, but we were above a declining 5-day moving average, and look how it played out. We gapped right back through it, boom, and we came right back up to it. So the longer we trade around in this range, the more the 5-day moving average could do something like this and flatten out to potentially start turning back up, which would be more of a positive sign for the overall market. The IWM did not hit its lower weekly expected move. You can see a big V recovery there too. It's actually back above its 5-day moving average, but it is still declining at this particular moment. Now, I want to revisit the summation index. So this is the NASDAQ summation index. We talk about it when it crosses, you know, right here, the parabolic, sorry, I even made a YouTube short on this, right? We highlighted them, and it could potentially mark changes in trend. So if you were watching that, we saw the change in trend, and well, that broke, and we saw the move lower. Okay, so what you want to see from a bullish perspective is obviously this to start turning back up, and the parabolic star to start ticking back over, and that will give us a potential change in trend to the upwards direction. So clearly, as it stands right now, it's pushing downwards. We do have a small positive divergence forming on the NASDAQ McClellan oscillator, so we'll see if that resolves itself to the upside at some point. I want to call out here the summation index for the NYSE, which is a more broader index, and as you can see here, we did have that change in trend right here, boom. So if we move up, did it follow the trend? Yep, we broke down. I want to call out, though, sometimes when we cross down through zero, we see pops in the market, but it's still not a good sign to be trading under zero, and obviously with the parabolic SAR above it. But I did want to call out, and I highlighted in blue vertical lines where you can see that when we cross down through zero with the summation index, boom, we saw a pop to the upside, boom, we saw a pop to the upside, boom, a pop to the upside. Right here was the one that we did not see a pop to the upside. It continued to falter to the downside. And then right here was the other one, boom, we saw pop to the upside. So now we just got this cross, and as you can see, 1, 2, 3, 4, 5. So, you know, 4 out of 5 times when we crossed down through the zero line, we did see a move to the upside. So we'll see here if this is any indication that, hey, we might see a little pop to the upside. Now remember, this crossed down right through very similarly, as we're marking out these, Santa Claus rally type, situations, it crossed down through that December marker too. Around that point, we saw that move, and then the Santa Claus rally took place. But we're right back there where we were last year. If we take a look at the BPSPX chart, we are under the 30 marker on the RSI. So this is still an overextended territory. So, this is where I still let up my foot off the gas as far as pressing hard on shorts. If we take a look at where we were in December, we also saw, RSI was, pretty burnt to a crisp there too as well. If we take a look here in December on the BPNYA, we are overextended. Right now we're overextended. To the downside, these RSIs are, they're going to resolve themselves eventually to the upside. And then we have the RSI for the BPCOMPQ, the NASDAQ composite. This is not an oversold territory, but it sure looks like it will be getting there at some point here soon. So when it does, that could potentially mark an area where we eventually, could stay overextended for a while, and breakdowns can occur in overextended territories. But as we've seen previously, we get overextended to the upside, it goes to the downside. We see a downside, we go to the upside, and it just does that, as you can see, time and time again. Okay, so that is where we currently stand as it stands. Another big asset to keep an eye on is the dollar. The dollar hasn't been going anywhere. Saw a little bit of a pop today, but you can see price action is coiling up, and if this thing wants to just pop to the upside, that could falter the Santa Claus, or potential of a Santa Claus rally, which could cause the S&P 500 to go down further. Now, if we start to back off a little bit, or, potentially just go more sideways, that could potentially still cause the market to see some sort of a rally. So I remain hopeful as far as the bullish perspective goes, despite seeing this crazy sell-off today. We do have, like I said, economic data drops. So if they come in better than expected, right? Good news is bad news potentially. It could lend a hand to more sell-side activity in the market. So as we stand, just to recap, declining 5-day moving averages pretty much across the board. So the trend still remains bearish. We knew that. But, if you want to take shots from the long perspective, just make sure that you're positioning correctly as far as sizing goes, and having a tight risk management practices in place. Overall, yes, if we start bouncing up, be mindful that a strong move back up to the upside can very well obviously get faded too as well. I still would like to start entering into shorts more up into this range, where I'd be looking at 390 to 392, but that'd be a very, very large type of day if we were to get up there. So as always, be careful, be safe out there. That's all I got for you on today's episode, everybody. See you later.